The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to Scorebox Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. Oil, volatile still amid conflicting messages on the status of peace talks. U.S. Secretary of State Marco Rubio says there's going to be a good deal or none at all.
There's strong alignment and agreement on what a preliminary draft should look like. I think that, like anything with something like this, it's going to take a couple days to settle on, even down to the disagreements over a word, sentence.
London returns from a long weekend today, but shares on the continent rally, with the Stoxx 600 closing at its highest level in more than 2 months, recovering its losses since the start of the war.
Ferrari releases its first ever electric vehicle, the Luce, co-designed by former Apple designer Jony Ive. CEO Benedetto Vigna sets out the importance of the move.
It's the day when we open a new chapter in our history book. It's a day when we can show the entire world all what we did, let's say, with all the people, with passion and daring to do something new, and also changing the way we do.
Well, a very warm welcome to Tuesday's trading as well. And we're all on 10 ticks, aren't we? It's the same old story, really. Everyone is really waiting to make their economic and corporate assumptions and investment decisions on the basis of this war and when it ends as well. Let's take a look at crude prices. They remain volatile. Slight discrepancy you'll want to just understand here as well. Brent trading up 2%. That's because it did have a close yesterday. And, of course, with the US strikes, it is trading higher. WTI is trading lower. That is because it is pricing off Friday. So it is still lower than Friday's close because there was no WTI settlement yesterday because of Memorial Day. OK, so they're actually still trading in line with each other, even though one is up and the other is down. So they're volatile, though, that's for sure, as traders digest the latest developments from the Iran war, with the US President Donald Trump giving mixed messaging around the status of peace talks and sanctioning strikes on targets in southern Iran. There was no settlement on WTI yesterday due to that public holiday. Stateside prices are down 5% compared with Friday's close, and Brent, as we mentioned, just pushing higher.
Meantime, the US has carried out strikes on targets in southern Iran in what CENTCOM described as defensive moves to protect troops. Targets included missile launch sites and boats attempting to lay mines. CENTCOM said the military continues to defend its forces whilst using restraint during the ongoing ceasefire. The strikes come amid negotiations between the US and Iran to end the 3-month-old war. US President Donald Trump said on Monday the talks are proceeding nicely, but reiterated warnings of a return to military action if a deal is not reached.
Well, Trump also appeared to complicate peace talks by linking a deal to the Abraham Accords. The US president said it should be mandatory for countries including Saudi Arabia, Qatar and Jordan to sign onto the initiative, and that any nation that declines should not be part of a deal as it shows, quote, bad intention. Key sticking points remain between the US and Iran in negotiations, including the fate of Tehran's enriched uranium. In a Truth Social post, Trump suggested it would either be handed over to the US or destroyed. Iran has not indicated that it would accept either option. The future of the Strait of Hormuz is another key hurdle. Reports over the weekend suggested there could be a deal to extend the ceasefire by 60 days, during which time the critical waterway would be reopened. The US Secretary of State Marco Rubio said a deal with Iran will take a little time.
I think our position is well stated. The president had a very important, I think, historic call just a couple days ago with a number of leaders from the region. I think there's strong alignment and agreement on what a preliminary draft should look like. I think that, like anything with something like this, it's going to take a couple days to settle on, even down to the disagreements over a word, sentence. So we'll have to work through that. If there's going to be a deal, we're going to have to work through that. But this is, it's either going to be a good deal or there isn't going to be one.
Or it's going to be a fudge. And let's be brutally honest about it. The chances of getting a full nuclear deal in this current round of talks are very limited. I, for one, will be amazed, given looking at the history of the region. The fact of the matter is, the deal which Trump hates so much, which Obama agreed with other top nations regarding Iran's nuclear capacity all those years ago, that Trump pulled out of. It took months and months and months, 20 months, I believe, to get that deal. So it's very unlikely we're going to get a full nuclear deal this time round. So what are we going to get? Are we going to get the opening of the Straits of Hormuz? That appears to be the mood music that we're getting. Are we going to have tolls on the Straits of Hormuz? That appears to be that we're not going to be as well. But is Iran going to get sanctions relief? Is it going to get frozen assets back? Quite possibly. And if it gets those, then it's in a more economically powerful position, isn't it, potentially? So there's a lot of question marks here as well. And Trump is getting pushback from Republicans as well as Democrats as well about whether this deal is worth the paper it is written on.
I think worth noting the markets have been showing some confidence coming up to the events of today. I mean, in Europe last week, we had a fairly decent bounce on stock markets. You saw it stateside as well. So I think in the backdrop, already there is some hope, a lot of fingers crossed that there could be a deal imminent. But in terms of this, a matter of a few days that Marco Rubio is talking about, we've all been on this line waiting before and there's been no resolution. It hasn't been a few days, has it? It's been weeks and weeks and weeks with still a lack of clarity about the outcome. I just want to go to the point around tolls, because this was the line that Iran would not charge tolls for ships to pass through, but there could be a cost for services offered, such as navigation and steps to protect the environment. So could there be a lingering service charge for navigating the Strait of Hormuz on the back of this? It was something that was mooted in conversation with Oman as well. So already those conversations, it seems, have been had about reshaping the waterway for the future.
Well, that's palpable nonsense, isn't it? I mean, let's be honest about
exactly.
it. Ships have managed to get through without either of those charges. So you're right.
A cost for services or a protection for the environment.
Wow.
I think the other practical issue here is if the ceasefire is extended by 60 days, you're then expecting the oil producers and the shipping companies to take a gamble on restarting things, repositioning things on the basis that a final deal will then be done. Because what if after the 60 days, no deal is done and hostilities resume? They can't sort of march them up to the top of the hill and march them back down again. These, the flows, the repair to the damage done to the gas plants, all of this, 60 days, may sound like a chunky time, but it's in the grand scheme of things, for the predictability it gives them, is very, very short-lived.
The only subtle nuance too around this story today is that the talks are in Doha. A lot of the third-party talks we've had have been in Pakistan. So will it make any difference in terms of the negotiating parties and how the market reads this news flow? I want to take you to the Asian markets and how they're trading for the Tuesday session. Our Hong Kong markets are flat. We've got the Shanghai Composite down 0.9%, and bookended by the other two major tech markets. Japanese stocks subtly weaker, but much stronger play out of the South Korean market that has bounced, as you can see, a very strong 2+%. To the European futures early on, the German stock market had recovered a lot of territory last week, tracking around record highs. The FTSE also claiming some territory. This morning, early action suggests will be a little bit softer out of the gates. So the 50 futures seen down 1/3%. So some of the give back from yesterday's trade. The FTSE, which returns after a bank holiday, is seen up slightly, almost 0.2%. Now, US futures on the back of what was a stronger week stateside, 2% to the upside for the Dow. We are also chasing more green this morning, Ben.
Let's bring in Florian Ielpo, Head of Macro and Multi-Asset Portfolio Manager at Lombard Odier. Very good to have you with us, Florian. Just give us your take on where the markets are this morning and their response to the big geopolitical events that still seem to be without resolution.
Hi, everyone. Thanks for having me. Well, it's very easy to describe this morning. We had a relief rally, yesterday, of course, in the moment of maybe lower liquidity due to off days. And this morning, what we're seeing is inflation memory. So this situation goes on. Yesterday, as Karen described it perfectly, markets have been buying into this potential reopening of the Strait, a lot more than most would have expected, and I would have expected, actually, given, as we learned this morning, that the news flow is far from being so certain. So we're still in this situation. You 60-day ceasefire, for me, is not the key news. The key news is we want this Strait to be reopened because the clock is ticking, and market knows that. The clock is ticking in two ways. One, inflation. It takes 3 months of blockade to generate an inflation surge that could push inflation numbers up until year end. That's the first thing. And 6 months to start denting demand. And this is the genuine situation that Donald Trump needs to deal with.
And then to take the question from your research paper, how much must rates rise to kill the fear of inflation? I put that question to you, but I also add on the question, and when?
Yeah, true. That's well, it's all the more important as the AI capex needs funding, and the cost of funding is moving higher. So when you look at inflation surveys being on the market side, or when you look at consumer surveys, just like the Michigan survey we had last Friday, they're all screaming inflation fear at the moment. Okay, meaning the short end of basically the 2-year projections have been moving up, the 1 year as well. And usually, according to our research, you have this exaggeration, you see, when you have an inflation shock, and to trim down that to get back under control this exaggeration, it takes as much increase in short-term yield. So basically, a 1% exaggeration should lead to 1% upward revision in yields. What we've had so far is 75 basis points of repricing on the Fed curve for an inflation premium that we estimate to 1 to 1.25%. So there's still some way to go if you want to be again the master of your inflation fears those days.
Florian, while we're talking about inflation fears, you put it in the context of the Strait of Hormuz open or shut. If we have open when it comes to the Strait of Hormuz, but with a service attached to it for navigation and environmental protection, would that make any difference to the inflation outlook?
Tough to say. I think the key point is with that service charge, will we see a complete resumption, a complete normalization of the flow that goes naturally through Hormuz? The number of ships going through the ship of the Strait is close to zero at the moment. We need to normalize that situation. I would say that even the second best equilibrium, a second best decision would be much better than what we have, especially as, the first few days were a situation, but as time passes by, the deadline gets even more pushing and pressing. Why? Because it turns an inflation story into a rate story. And the rate story is upon us. Real yields in the US have barely declined yesterday, even with let's say, enthusiasm of equity markets overall. So let's not make too much of this rate situation before it becomes an equity situation.
Indeed, and we know the benign scenario that macroeconomic forecasts depend on, that effectively the situation in the Middle East would be wrapped up and a lot of the price action would be fading out by the end of June. And that is in doubt the closer we get to that time frame, Florian. So what happens from here? If we do get some sort of resolution, what happens to yields that have been very sensitive to the situation?
True. Well, yields are sitting currently in a difficult spot because of the crossfires. The Hormuz situation is not the only situation that weighs on the trajectory of yields at the moment. But it's one of the two key stories, I would say. You have the term premium, so you have the fiscal situation. This is still with us. It's in the background. We're forgetting about it because of the Hormuz situation. And then you have the Hormuz situation. If we get some sort of a relief on the inflation lag, first long-term yield will decline, but the real part of them will probably take time to normalize entirely. And at the moment, we are at 2%, around 2%, which is exactly where real growth in the US is currently. So meaning that it's constrained on the overall economic activity. Maybe part of the consumers, the low consumer numbers we had on Friday was also reflective of this overall situation. So step one is a deflation of this inflation bubble we're currently seeing. And the second step eventually would be a normalization of real yields. But that takes a better understanding of the monetary response of the Fed. And now we're changing the leader of the Fed. So there's still a decent layer of uncertainty around this situation.
All right, Florian, I've listened to everything you had to say to Ben and Karen. I have a really complicated question. What should our viewers be buying?
Say that again, I'm sorry?
What should our viewers be buying on the back of everything you've just said? Because I think that's the $64,000 question for a lot of our audience.
What's striking me at the moment is the fact that U.S. equities are rising with real yields. And this is so normally a sound situation, sound signal for markets. So what's supporting the market at the moment is the overall AI story. You find a lot of that in the US space. And on top of that, you have a large part of the large caps in the US, which are not yet reflective of the overall improvement of their earnings, consumer discretionary, material. There are still sectors that are probably that could be catching up, especially if we see an improvement on the Hormuz side. So I'm still confident that equities in the US could see higher levels. Now for that, we see a chain on event which appears to be difficult to predict.
Yeah, look, I was reading your piece about forward discounting mechanisms of markets. But is that breaking down? Is it working? I mean, when Intel, bog standard chip stock, is trading 93 times forward, I can't help thinking something's gone a bit awry.
Yeah, it works until it doesn't. Meaning that normally rates up equals equity up, and even real yields up equals equity up. That's the normal narrative of markets. Improving condition leads you to sell your bond and buy your equities. It's something very intuitive, I would say. Now, there's this threshold effect. There's a pain point in the level of yield that could start weighing on the trajectory of equities, especially in a world where we need to invest significantly because of the AI capex, notably, and other things like infrastructure plans. We're no longer talking about. So the pain point is around 2%. We need those long-term real yields to stabilize now and stop progressing, because if it goes on, then it could unravel the entire funding story and investment story that is currently supporting the market narrative. So it works until it doesn't, and we are not too far away from the moment it doesn't.
All right, very nice. Thank you very much indeed for that. Florian, lovely to see you. Florian Yelpo, head of macro and multi-asset portfolio manager at Lombard Odier. Right, coming up on the show, recent experiments show AI models developed by a string of big US tech names failing safety tests. We'll have the details. Plus, the UK Chancellor Rachel Reeves reportedly pushes purchases of British products for critical industries. We shall discuss, and we'll bring you Charlotte's conversation with the CEO of Ferrari as the luxury automaker unveils its first fully electric car. I'll give you a clue, ladies and gentlemen. It is not for us mere mortals unless we've got a lot of money to spare. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Ferrari has unveiled its first fully electric car designed by the Apple chief Jony Ive. The Ferrari Luce is a 5-seater powered by an electric engine on each wheel, and is able to reach 100 kilometers an hour in just 2.5 seconds. Very useful in Sainsbury's car park. Let us get to Charlotte. Charlotte, I'm on the Ferrari website. And I'm looking at all these beautiful cars, the 296 GTB, the F80, the 849 Test. I know nothing about cars, but they all look really lovely. And then there's this thing called the Ferrari Luce, which I understand retails at $640,000 before you had all your own spec put on. I've just said I know nothing about cars, and Ferrari can throw whatever you like at the screen now. It looks so dull compared to all the other amazing vehicles.
So that would be one of the controversies around the launch of this car. 5 years in the making.
Beauty Ferraris.
Look, it is a beautiful car when you see it, but it doesn't look like a Ferrari or your traditional Ferrari, and that's for sure. And just, the fact that they release these pictures where it's blue rather than red, they're trying to do something different. So that would be controversial. Now, the fact that it's their first full electric Ferrari, if anyone can show that an EV can have strong performance. Ferrari are the ones that have to do it. Show the sports car and show what it can do. You were saying the specs are impressive, from 0 to 100 kilometers per hour in 2.5 seconds. So just like the other Ferraris, it has the strong performance. It's 4 electric engines. The co-designed interior has been designed by Sir Jony Ive.
Have you ever driven?
It looks incredible inside.
Was it 60 miles an hour in 2.5 seconds? I mean, you look like an absolute Burke driving like that in London.
It's the ability to be able to do so, I think. If someone's at
I think there's a point. No one drives those Ferraris actually.
I mean, apart from those idiots who go up and down the Brompton Road or King's Road or something, dare I say, a lot of young gentlemen it tends to be.
It's sure they will be. That's the challenge. One, the fact that it's electric. Will petrol head buy it? But they say they do want to bring in some new customers with this EV and this car. That's why they're going for a new look. They say new technology requires a new design, and so that's what they're going for. But certainly, you have to raise the question of, if you're going to spend €500,000 in a car, that's the starting price, because you can personalize and make it go higher. Do you want your car to look like a Ferrari? Are you okay with the car looking different? And that will be one of the questions, on the take-up of this car. But certainly, it is a big first for Ferrari, for the EV industry at large, and for the CEO Benedetto Vigna, because, his very first Capital Markets Day back in 2022, that's when this car was announced. And now finally, it was almost state secret level at the event this weekend for the unveiling of this car. So I had a chance to catch up with the CEO Benedetto Vigna, and we talked about how important this moment was for Ferrari and for the EV industry.
I think this is a very important day. I was looking for this day since 5 years. It's the day when we open a new chapter in our history book. It's a day when we can show the entire world all what we did with all the people, with passion and daring to do something new, and also changing the way we do. So very, very important day.
So it's interesting with this one, because you have to both attract your classic customers, but you also say you want to attract new customers. And that already starts with a lot of firsts in this one, the bigger trunk, the 5-seat, and it looks quite different to your usual car. So can you please both your Ferrari lover and your new client?
Look, when you do a new technology, you need always to keep in mind a word that is called the respect. Respect of the technology. Because when you have a new technology, you need to make sure that that technology is properly represented in the design. So the design must be different. You have to respect the different needs, the different wishes of the clients. So we will have clients, already existing clients, that will take it, and some clients that are not client today, some people that will not client today that will get in our community, and then respect also for the work of the people. So yes, I mean, there will be people, existing client that will take it, and then will be new client that will be part of the community because of Ferrari Luce.
And you said in the presentation as well that this new EV car, opens up new design opportunity beyond this car itself. So can you explain why, how?
It's very much. I mean, when you talk about electric cars, you talk about an engine that is very small. It's a different dimension of the thermal engine. So you can do things like in Ferrari Luce, for example, the hood is completely different than a normal thermal car. So this is a degree of freedom that the technology offers you. Inside the car, you have the use of some material, like the aluminum, the glass, the interaction that can be read with the right eyes, can be used also for other cars, for the thermal car.
And of course, the big concern was the noise, the all-important Ferrari roar.
Sound.
The sound. Are we having the same one, the same sound, the same sensation with this?
The same sensation, yes. The sound you heard yesterday evening is a sound of electric engine. The sound, each engine has its own sound. What is important is the emotion that is giving to the driver.
And of course, there's a very interesting collab with this car is with Sir Jony Ive and Love From. How important was it to bring in this external look, to bring something new to Ferrari?
Look, we in Ferrari always believe in the value of open innovation. In the past, our founder was working with carrozzieri, the coach builder, let's say, to do something new. Today, open innovation continues to be an important dimension, and if you want to do something new, you have always to work with different people that help you to see the reality with different eyes from different point of view. So it has been a fantastic journey together that brought us to this beautiful car that we did together.
And so the car will start at just above €500,000. You invested a lot of money in this project, and you said more than 60 patents coming through. And yet we know that margins are lower on EV cars. So are you going to actually make money with these cars? It's a bit of a concern from some investors. Are you going to make money?
Look, first of all, I like your point. We invest a lot of money. We invest the right amount of money. We are focused, we are disciplined. We use the capex in the right way. I think that we invest the right amount of money, and this initiative, this business initiative, is in line with the profitability that we have also for other initiatives in the same range. So, when we use capex and use opex, we use wisely.
So that was Benedetto Vigna, the CEO of Ferrari, after the launch of Luce over the weekend, the very first full electric car. So a challenge there to show whether EVs can have the same level of performance than the traditional sports cars. So Ferrari trying to prove that. But again, a car that looks different from the traditional one. And that comes at a time, of course, where there's a lot of questions around EVs and EV demand. We know that was going down. We saw a little bit of pickup since the beginning of the war in Iran, but certainly there is some uncertainty on that front. The question of the Middle East, of course, for Ferrari, an important group of customers. It's only around 6% of their sales, but very high-end, very highly personalized, very expensive cars. But when I asked him about that, he said, look, it's business as usual for us. They don't see an impact. And another uncertainty, of course, is the tariffs in the US. It's an important market for them here again. And they said, look, last year we increased prices when there were new tariffs. We are ready. If these new tariffs that Trump threatened of 25%, we are ready to respond to that.
I know that Ferrari was looking at targeting new markets like China with this car. And I think that's fascinating because as EVs have emerged and the Chinese have become such dominant players in the Chinese market with their technology, you do wonder whether the badge carries as much weight in China in an EV future. If Ferrari can crack this, it'd be fascinating for European badge makers.
Well, especially that their sales have been going down in China recently, so they have to bring back something that excites the customer on that front. And a lot of investors think that this model is actually particularly well suited for the Chinese market, that it could place them in a good place there. I asked him about that. Is that the one that's going to help you re-crack the Chinese market? He said, look, this is a car for all the markets. So it didn't really answer the question. But certainly this is what analysts are saying, that this is one that's designed particularly well for the Chinese market, where they have been losing some sales.
That's interesting, because I think Lamborghini abandoned their plan, didn't they, to launch an EV by 2030. So this sort of puts Ferrari in that unique spot in their battle for those younger customers.
Yeah, but it's interesting because Ferrari, like the other players, despite launching the EV, they have reviewed their portfolio and they had these very ambitious portfolio plans. EVs were going to be 40% of their portfolio offering. They downgraded it last year to 20%, and ICE was supposed to be 20, they upped it to 40. So like all the other car manufacturers, they are adjusting their plans, they're offering. They say it's up to the customers to choose. The range of this EV is the same as another Tesla. They say the performance are quite strong, but say at the end of the day, is it for the customer to choose? And the question of the residual value of EVs, of course, when you buy a Ferrari, you think that's going to gain in value, it's an investment. There are question marks whether an electric Ferrari will have the same residual value. And they said they built a whole building in Maranello to kind of maintain these buildings. When customers will need to bring these cars, they say Ferraris are forever. 90% of all the Ferraris ever built are still on the road. I asked whether that would be the same with these EVs, and they say, yes, we have invested money so that we will be maintaining these cars for the customers so they are the same than the other ones. But some customers will still be worried about that.
Us Land Rover Defender drivers say, 90% of the Land Rover Defenders ever built are still on the road. The other 10% made it home. Can we just show... It's true. Can we just show which is more than TVR, this car, I wondered if it was this colour. Normally you think, it's going to be red. That is the same colour, correct me if I'm wrong, as the Altanis drive their supercars in central London. The Altani, the Middle Eastern powder blue, I think it's all turquoise, whatever you call it. That's the same colour as the Altanis drive. So I wonder if that's a nod to our Middle Eastern friends.
But it's interesting, the decision that the main video that they've released about the car is blue rather than red.
Yeah.
So, there's an active decision there of trying to do something different. But again, they will have to attract some of their loyal old school customers that love the Ferraris, and new customers. They very openly say this is a car for new customers to bring them on board.
You've been in a lot of Ferraris now at Maranello. You've had if you could choose one, would you have this or would you have one of the ICE engine ones?
I have to say, the sitting inside this one is incredibly comfortable. Wow. It's really spacious. The design as well by Jony Ive, of course, who has designed many of the Apple products, is really beautiful. It's very comfortable, more comfortable than other Ferraris, I have to say. Okay. I'm not a petrol head, so not necessarily the opinion of others. But inside it's very comfortable, very beautiful.
All right, Charlotte, thank you very much. Fascinating. We'll hopefully have more on that a little later. Meanwhile, the European markets revving the engines ahead of the Open in half an hour. This is what futures are pointing to, and it looks like FTSE futures calling a stronger Open compared to the other benchmarks, but let's see what happens. Of course, London coming back from the public holiday break on the Monday, playing catch-up with the other markets. We'll be back after a break. Don't go away.